See students, we are going to solve the practical problem number 1 of final accounts. Step number 1, what we are supposed to do? Mark adjustment, right? Hidden and given both. Amit Bhai and Narendra Bhai are in the partnership sharing profits losses equally. So 1:1 is the ratio. You are required to prepare profit and loss and balance sheet as on 31st March 2019. So for the sake of convenience, what I have done, I have already marked items on which adjustments are there. Hidden adjustment I can see. See, this is what here hidden adjustment is given. Here hidden adjustment is given, so I made a mark. And adjustment number 1, stock 43,000 not to be marked. Uninsured goods 8,000, that is also not to be marked. RDD to be created on debtors. So sundry debtors, one adjustment of RDD. The next one, Mr. Patil, our customer, has become an insolvent. Insolvent means what? Bad debts and could not be recovered. So another adjustment on debtors. And if there is bad debts, that is also to be marked. Is it there? No, it's not there. Well, the next adjustment is outstanding expenses, rent and salary. So I'm making mark on salaries and rent. And the next adjustment, factory building and furniture depreciation. So factory building and furniture. Here is furniture. Factory building is also an asset. So adjustments are marked. Now we are going to start with the posting. See, this is what I am doing posting on. Shall we start? Plant and machinery 2,80,000. Where it is to be posted? On asset side. So I am writing plant and machinery. Plant and machinery. Amount is 2,80,000, though no adjustment, so I am writing directly in the outer column. The next one, factory building 75,000. Factory building 75,000 to be written in the inner column. Right. The next one, sundry debtors 28,800. Adjustment to be written in the inner column 28,700. The next one, purchases 85,500. So 85,500 to be written in the inner column 85,500. Next, bad debts 500. This bad debts we need to already mark to be written. Sales return 2,200. Debit wala return to be subtracted from sales. 10% government bonds 40,000. Assets, so I am writing here on assets 10% government bonds. Asset side 40,000, but since there is an adjustment, writing in the inner column. Import duty, tradings debit side to import duty 1,800, no adjustment. Next one is legal charges 2,000. Legal charges 2,000. Next one, motive power 12,000. Trading debit, motive power 12,000. Next one, warehouse rent 1,800. P&L's debit side. Warehouse rent 1,800. Cash in hand and cash at bank assets. Cash in hand and cash at bank on the asset side, 20,000 and 70,000 respectively. Next one, advertisement 10,000. There is an adjustment to advertisement 10,000 to be written in the inner column. After advertisement, the next one is salaries 3,800, adjustment 3,800 adjustment. Next one, rent 1,500 to rent 1,500. Next one, drawing Amit Bhai and Narendra Bhai Masi. Got to write Amit Bhai and Narendra Bhai. Select capitals and logical, from which we are going to subtract drawing. So while writing an amount of drawing of both of these, I am writing as minus 2,400 and minus 3,200. Furniture is 1,95,800, so that is also to be written on the asset side. Furniture 1,95,800. Next one, bills receivable 20,700 to be written receivable 20,700 directly in the outer column. Since there are two adjustments on sundry debtors, I increase the lines for the same item. And freehold property 41,000, no adjustment, so writing freehold property 41,000, no adjustment. Alright. Now capital account, these are to be written like this: 3 lakh and 3,50,000, 3,50,000 and 3,50,000 and 3 lakh. Sales 1,80,000. $8,500 bills payable, that is to be written on the liability side. 8,500. Discount on credit side to be written on the credit side of P&L by discount 1,200. Next one, creditors 38,500, liabilities no adjustment. Next one, RDD 2,700, this is old RDD, so to be subtracted from the debit side of P&L under bad debts. Bank loan 15,000, no adjustment. On liability side 15,000. The next one, purchase return 2,000 to be subtracted from purchases. Now these are the adjustment, these are the posting that we have done. Coming to adjustment, each adjustment will be having two effects. The first one, closing stock 23,000, buy closing stock 43,000 here, and second effect will be given on the asset side, closing stock 43,000. Right. Okay. See here, these are the two effects. Coming to the next one, uninsured goods 8,000 were stolen. So by goods stolen, first effect, $8,000, and the second effect, to loss by theft, second effect of this will be here. These are the two effects: trading credit, P&L debit. Create RDD 2% on debtors. Now, though they have given RDD wala adjustment first, but you need to remember that bad debts to be written out first. Bad debts is of rupees 500, which is next adjustment, and necessary explanation is already given offered in the classroom, and then only your RDD to be subtracted. Your RDD is here 2%, so 2% RDD to be subtracted only after subtracting your bad debts first. 2% RDD comes to 564, and the second two effect of new bad debts rupees 500, these are to be added. New RDD, this is also to be added in bad debts P&L's debit side. So the two effects of these two items are subtracted from debtors on the asset side. If you want, I can make it small, and second effect is on the debit side of P&L. Well, now coming to the next adjustment: outstanding expenses, rent and salaries 800 and 300. So what do we do for outstanding? We add it. Outstanding outstanding rent is 800, so once it is added, and outstanding salaries is 300, so it's been added. Second effect will be given: outstanding expenses. The first one is rent and salaries, and these amounts are to be written here. Like this. So hope you have got it, the two effects. Coming to the next one: depreciate factory building 2500 and furniture 1800. Depreciation effect is less from assets, less depreciation, which is given factory building 2500. This amount is given by them in the problem, so subtracting here from this, and second effect will be given on the debit side of P&L to depreciation. This depreciation on building is written, so second effect you can say. Well, thereafter furniture 1800 is a depreciation, so less here as well. Depreciation will be subtracted 1800. Second effect will be given on the debit side. Here depreciation on furniture 1800. Second effect will be given here. So you could see. Next one: now your given adjustments are all. Coming to your hidden adjustment, coming to the first one is 10% government bonds which have bought on 1st October 2018, means we have kept it for 6 months. So we need to add here outstanding interest for 6 months. We have explained it in the classroom how this 2000 will come, the calculation. If you need to know, let me know again, I will explain it again. And second effect of the same is, since this is our income, interest on government bonds, so it is to be written on the credit side of profit and loss account. Can you see this? Well, And one more hidden adjustment is about advertisement. So this hidden adjustment for 2 years 10,000 from 1st of Jan 2019. So only for 3 months, proportionate amount of 3 months coming 1250. So this belongs to current year and remaining amount is prepaid. So prepaid advertisement, second effect will be given over here. $8,750. I hope you have got it. And yes, posting over, given adjustments over, hidden adjustments over. Now we start with the closing. Before we start, taking the amounts in the outer column by adding and subtracting. To start with, take the total of credit side of trading account, put it on the debit side, from which your debit side total should be subtracted and balancing figure should be taken as gross profit. So sum of this one, here it will be written by gross profit written. Now what is to be done? On the credit side, we have taken the total, and from this total we are subtracting the total of debit side. The remaining amount will be taken as what? Net profit. This net profit will be distributed between these two, Amit Bhai and Narendra Bhai, equally. So first, to find out from your total of credit side, debit side total will be subtracted. For doing which, we need to do one thing. We got to take the total of this. And now this net profit is to be distributed between or among these two partners equally. So dividing this particular net profit by 2 comes equal amount. The distribution will be taken in their capital account as net profit. It will be added net profit this, and same net profit will be added here as well for Narendra Bhai. So you can see the distribution of net profit we have shown, taken to the liabilities. Now taking this total in the outer column of both the partners, and now the last step, hopefully if we have done everything correct, our total of liabilities and assets will be matching. If everything is correct, can you see, this is the first sum that we have done with.